in further detail. We have Raymond, the first management on the show, joining in from, to discuss their post-first quarter earnings as well as discuss the demand and business outlook as well. Amit Agarwal joins us from the sidelines of the Motilal Oswal Global Conference, the investor conference that is underway. Thanks a lot, Amit, for joining in. Always a pleasure speaking with you. There are two ways to look at Raymond now that we're looking at it. One is obviously the textile business. The second part is the real estate business. Increasingly, the real estate getting a lot more dominant when it comes to headlines. On both those fronts, what are your targets for this year and the next, if you could give us a sense of aspiration?
Yeah, thank you for having me on your show. Obviously, if you see that we have announced the various corporate actions which enabled the demerger of the lifestyle business, which is gotten probably listed in the next 2 to 3 weeks. And we will have a pure play net debt free lifestyle business, which is again very, very attractive. And very clearly, you see the first quarter is always a weaker quarter, seasonally weak. And this time more so because of the weddings, no number of weddings, as well as you had very significant heat and the election impact. But we, from our dealer channel network, we are hearing that as soon as the Dussehra, Diwali, the festive season onset, post that, a very good number of wedding dates, which will enable the business to drive on a very stronger growth. And similar is a story when we are hearing even in the export market. If you look at it, we are also a big garment exporter. We are seeing good opportunity as the recent challenges faced in the Bangladesh market. We have got some customers coming on our way and saying that we want to shift some of the Bangladesh productions to you guys in India. And I think these are both very well and firing well. As far as the real estate is concerned, I'm sure you would have seen that we have already done exceedingly well in the Thane land bank, and we continue to get new projects in the JDS side and outside of Thane and Mumbai, which is also progressing very well. We are very good in terms of the response from the customers, as we have sold more than 50-55% of the inventory which we launched in the Bandra, which is outside of Thane, in the first 45 to 50 days of the launch. So that is again very interesting. And the third piece of the business, which is our engineering business, which is in the auto components as well as aerospace defense, is again doing extremely well, as we see the aerospace defense business is continuing to grow at a minimum of 20-25% a year-on-year basis. So overall, as we have already told, that all our businesses across the group, we are a net debt free, poised for a free good growth, considering that businesses have a free cash flow.
Okay, all right. Amit, welcome to the show. So important update coming in there, where you are going to relist your lifestyle business in the next 2 to 3 weeks. So that is something that we can expect from your company. Just wanted, some more details with regards to, is my voice reaching you?
Mr. Agarwal,
Amit, is my voice reaching you? Okay, we'll just reconnect Raymond and the management from the sidelines of the Motilal conference. But important updates which have come in from them, where they are relisting their lifestyle business in the next 2 to 3 odd weeks. They are seeing some amount of traction coming in from Bangladesh. So maybe the textile business could probably benefit for them in terms of, the disruptions which have taken place in Bangladesh. So customers are probably inquiring a little more. In fact, we do have Amit back with us. Amit, if you could just give us an update with regards to this incremental business that you're seeing from Bangladesh at this point in time. How much have you seen in terms of business coming through? Is it just inquiries at this point in time? If so, how much has it risen? How much do you think it'll probably turn into when it comes to tangible business, and by when?
So look, the Bangladesh was exporting roughly $50 billion worth of garments. And in the sector which we operate, it was more in the range of $8 to $10 billion. And we were supplying the fabrics which were getting garmented, made the apparels and sent exported out. So I think the first bit is that what we were exporting, the fabrics which were getting converted into garments, that is the first piece which we expect to come. But at this stage, any garmenting facility would not happen from today to tomorrow. It is a process because they want to go through this whole process, how the shift can be made, because there is always a WIP with these guys. So over the next 6 to 8 months, we would see. But I think very clearly we are seeing an opportunity that from our 1100 odd crore of garmenting business, somewhere in the range of 7 to 10% of that business, 80 to 100 crore can be shifted from a garment export out of Bangladesh, can come easily to us.
All right. The other part on the real estate business itself, you said that 50 to 55% of your Thane inventory has been sold. Could you give us a sense of what is the current unsold inventory in terms of value that you're sitting on? By when do you realize that? And what are the other projects in the pipeline?
Yeah, so if you look at it, our Thane, we have a land bank of 100 acres. And in that 100 acres, 40 acres is under construction as we speak, which is approximately 9,000 crores. And of which, as I said, around 5,000 crore worth of inventory we have sold, and balance 4,000 crore of inventory will be sold over the next 3 years. But the remaining 60 acre would deliver another 7 million square feet, which is almost 16 to 18,000 crores. So overall, we believe that the full potential of 27,000 crore of Thane land would be realized over 7-8 years. However, since we have signed 5 JDA projects, which is outside of Thane, of around 5 to 6,000 crores, which is also in the process, one JDA project in Bandra we have already launched, and over the next 12 months, we would be launching another 2 to 3 JDA projects. So I think broadly you can consider our real estate business in the next 3 to 4 years would have easily a pre-sales booking of almost 4,000 odd crores, roughly 50% from Thane and 50% from non-Thane. And that should be able to drive the business thereafter 15 to 20% year after year in that kind of a range.
Okay, all right. You also mentioned that your aerospace, segment is seeing around a 20 to 25% growth, the aerospace and defense segment. You're also demerging both of these segments. I understand the auto and the aerospace segment. Can you tell us what is the order book looking like specifically for defense and aerospace, and what can we expect going forward in terms of execution? You mentioned 20 to 25% growth. Is that sustainable through not only FY25 but FY26?
Yeah, absolutely. So if I look at it, the aerospace defense, the 24 was growing in the range of 270 odd crore business. In the next 3 years, we are very confident that we will double this business. So there is a great journey for Indian aerospace defense, and we are into the engine critical components. So therefore, once you are in with a customer, then you are in for a very long period of time, unless until you mess up with the quality, which we are very careful at. So I think that is a unique thing which we have got, that we are into the engine critical components, and for the two largest in sort of aircrafts which we have, the Boeings as well as the Airbus. So that's a big advantage, and the overall engineering sector, which is Make in India, is doing extremely well. And our auto components business, we supply almost 65-70% export markets and to all the top 15 OEMs globally. So that is also picking up very, very fast. We are investing also money in that area in order to grow our capacities. So overall, our business of engineering is 1,900 crores, which can easily become double itself in the next 5 years.
All right, and final question before we let you go, Amit. The balance sheet saw a fair amount of improvement post the stake sale of the consumer business. As you are investing in newer businesses, if you could give us a sense of where debt would peak out and what are the further deleveraging plans that you have, if at all?
Yeah, sure. No, absolutely. We are today as a group absolutely net debt free. We sit on the cash. And all our businesses are significant cash flow generating business. For example, Lifestyle last year delivered an EBITDA of 1,100 crores and it has no net debt. Even if you see the real estate, on the real estate side also we are sitting with 450 crores of net cash. And because we are in a JDA-led model, we are not buying land, so there is no question of taking debt in terms of, it is a project-specific construction debt which is required for more than 2.5 years. But we are very careful in leverage, so that net debt net cash remains positive. Similarly, on the engineering side, also we are putting the capex from the free cash flow generations of that business. So overall, as a group, we are continuing to be a net cash positive, and we are not anticipating any significant amount of debt to be there on the group. As far as lifestyle business is concerned, which is going to be listed in a short order, I think I want to give you the perspective that in terms of the wedding play, which we are going to see over the next 2 months after, it's a very large business. If I look at it based on the recent reports, that the Indian menswear market in wedding is roughly in the range of 75-80,000 crores. And we, because there won't be a wedding in this country where a Raymond suit does not get stitched, we have also launched the ethnics. Overall, we have a market share from a retail value of approximately 5% in that segment in the wedding market, which is very important, and we continue to grow because of our distribution reach and the presence across the country. And that will be a very keystone, and being a pure play business will help us to further boost our penetration into the wedding market.
Okay, all right, fair enough. Well, very bullish outlook coming in there, Mr. Amit Agarwal. Thank you very much for joining in and speaking with us. So that's the outlook coming in from Raymond. They're expecting growth coming through in their lifestyle business, which is going to be listed separately in the next 2 to 3 weeks. And besides that, they're quite bullish in terms of the real estate space as well as the defense and aerospace segment. Well, on that note, we need to take a short break, but a lot more on the markets, lots of stocks lined up. Stay tuned.